Good afternoon. At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability.
My bigger fear is contrary to what Jay Powell says at the Federal Reserve, that even though we're not thinking about raising interest rates, inflation is going to raise its ugly head.
These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete.
Inflation. And we're going to go from less than 2% to 3, 4% to 5%.
We will aim to achieve inflation moderately above 2% for some time so that inflation averages 2% over time.
Because you can't print all this fucking money without it causing inflation. 21% of all the money since the beginning of time was printed this year.
The economic downturn has not fallen equally on all Americans.
I mean, if the average little guy that owns a fucking coffee shop or a fucking Starbucks, they would shit.
Wow.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you're all having a wonderful Friday. Let's get right into today's episode. So just as we've been predicting for quite some time now on this channel, and right on cue to follow Wednesday's announcement from the Fed that they have no intention on raising rates until at least 2023, we're seeing the dollar gain some bullish momentum, the 10-year rate fall a bit further, and traditional markets are also showing some serious signs of weakness. Now, before we dive into the charts here and try to pinpoint some possible bearish targets, I have to let you guys know that while the environment for really all markets right now do have an incredibly bearish feel to them, I am extremely confident that Bitcoin will not only recover, but will do so with some force and surprise a lot of people. And this bearish price action we're seeing right now out of Bitcoin is really nothing more than an incredible opportunity to get your hands on some Bitcoin at what will likely be the lowest prices we'll ever see Bitcoin at ever again. Now, despite the overwhelming amount of bullish sentiment over the last week since Bitcoin started what was essentially a relief rally, I've been pretty skeptical of this recovery, and I've been saying that we're likely going to see some further downside. Now, my reasoning for this stance really has nothing to do with Bitcoin and everything to do with the fact that traditional markets have been heading in the direction of a massive sell-off for quite some time. If you've been following the channel, then you know we've been closely watching the 10-year rate, the DXY, and the S&P 500 for clues as to when Bitcoin was going to take its next correction. The DXY getting that bullish bounce we've been expecting, likely sending the dollar back up towards 97% on the index, a nearly 8% move from its 89% low we saw just last month. Now, if you've been following the channel again, then you also know that there's a pretty strong inverse correlation between the DXY and Bitcoin, letting us know that should this bullish momentum continue, then we are possibly looking at a pretty hefty sell-off in Bitcoin and likely the entire crypto market. Now, this would make sense with an expected death cross in the near future and the bearish price action we're seeing across traditional markets in response to the Fed's announcement on Wednesday. Now, Bitcoin right now is sitting just above the $35.5 thousand price level, and it appears the bears are in full control as we head into the weekend. Falling it back under the 34 weekly exponential moving average earlier this week, Bitcoin is still holding support above the 55 weekly exponential moving average and above the critical $34.5 thousand support level. But we are expecting some lower prices, with the next support level near the $32.5 thousand price level before revisiting the swing low all the way down here at $30,000. Now, should Bitcoin break the 55 weekly exponential moving average, then we're looking for buy order fills starting at the $22,000 price level. And should we see another capitulation style sell-off event like we saw in March of 2020, then it wouldn't be surprising to see Bitcoin fall all the way down to around $9.6 thousand, a significant price level considering that this is the lowest remaining CME gap on the Bitcoin chart. Now, while we are expecting Bitcoin to fall pretty low if the dollar pushes to our expected bullish targets, there is some good news. Now, we've went over this quite a few times, but just to refresh really quick, the DXY broke bearish out of this giant diamond top pattern back in 2020 following the March crash, and we've been expecting a move back up towards this 97% area and what would really be a bearish retest of this lower trend line and confirmation of a much bigger move to the downside. Now, if the dollar does get a harsh rejection here and confirms this bearish breakout, then we're looking at the DXY falling down to at least the 79% area, a 17% move from this bearish retest level. Now, if our inverse correlation estimate holds true, a 17% bearish move out of the dollar will likely translate into an incredibly bullish move out of Bitcoin, bringing the price back up towards previous all-time highs. But that's it. That's all I got for you guys today. Thank you so much for dropping in and hanging out with me till the end. Don't forget to like, don't forget to subscribe, and don't forget to join the free Telegram group. The link is in the description below. That's it. That's all I got for you guys today. I'll see you guys in the next video.